You are listening to ChartingWealth.com's weekly review and forecast for the week beginning Monday, the 23rd of November, 2015. Boy, the year is spinning quickly to a close. Let's jump in and see what we see on the big chart. This is what we do once a week. We look at what's going on our weekly charts and our daily charts for three of our indexes, our total market, S&P 500, and the Qs, which is the NASDAQ 100, and gold. What do we see? We had a crossover back on the week ending on the 23rd of October, going up. The market's really in a narrow trading range, sliding sideways somewhat. We do still have a confirmed uptrend on the big chart. If we drop back to our daily chart, what do we see? Well, we see that the daily chart actually is in a downtrend. And again, our big charts and small charts will compete with each other. What's beautiful is when you've got a big chart and a smaller chart, and the big chart's going in one direction, the small chart's going in the other, and it rotates back around and starts moving in the direction of the big chart, that's when you get into the market. So what are we looking for? Well, we still don't have a crossover yet on our MACD. That's our real trigger line. And again, we did have an event with an up move in the market starting around the 16th, and we had a week that was continual up moves. So what you'll want to do is continue to pay attention, see when the daily chart crosses over going up. That'll let you know that indeed that up move is stronger than it otherwise would have been. That MACD, the moving average convergence divergence, is the real indicator that we use at ChartingWealth.com. We could use 100 of them. They're indicators for every minute of the day, but you can confuse yourself with charts that are too complicated. That's why if you'll sign up for our newsletter at ChartingWealth.com, you will get our charting layout from ChartingWealth.com, plus a link to our 15-minute how to read a stock chart video that will help you understand what we talk about constantly. So the daily chart still in a confirmed down move, although we did have a week of up movement. Now let's revert over to S&P 500. Look at that on the weekly chart. What do we see? Well, it's in a confirmed up move, starting right at the end of the beginning of the week that ended the 23rd of October. Similar again to what happened with IYY, and the market moved up for a few weeks and then has sort of slid sideways for the last couple of weeks. Again, the market ended in an up move for the week as far as the candle goes. If we revert back to our daily chart, what do we see? Well, we see that the daily chart's not yet crossed over going up. Derivative oscillator, like we saw with the total markets, lost a lot of speed. And it was a nice up week for the market, reaching up toward the Bollinger Bands, toward the top. Those are our volatility bands. So again, that's where we've got the total market, the S&P 500, both in up moves. Now let's see on the weekly chart the Qs. The cubes, the NASDAQ 100's been up to. It crossed over again, very same time period the total market and the S&P 500 did, moving up. Several weeks of up movement, then 2 weeks of sliding sideways with negative movements for the week on our Hinki Ayashi type of candlesticks that we use. Now, if we revert to the daily chart, what do we see going on for the whole week? Well, it was a nice upward movement starting on, well, down movement on the first part of the week and then up movements for the rest of the week, ending with an up move on the 20th. As we go into the new week, still not yet crossed over going up, but again, the big chart is in an up move for the weekly. So you may see that confirmed, which would give you a good idea that the market is in a confirmed total upswing, even though it's been sliding sideways recently. Now, lastly, let's look at gold. What's gold doing? Well, those of you looking at the chart, not listening via audio, see that we've got this blue line that you see we use actually on our daily review and forecast. That is our 2-day chart. That is our big chart for our daily charting forecast. And it confirms the down move we've seen in gold starting back on the week ending on the 30th. Gold really topped out back on the week ending on, that was the 30th of October, actually topped out on the week ending on the 16th of October, and has continued down over the last several weeks, crossing over, going down on the week ending on the 13th of November. If we revert to the daily chart, we see that gold has literally been sliding sideways for quite a while, hasn't yet crossed over on the daily chart, but it looks like it's getting closer to doing so. The derivative oscillator's lost a lot of its speed. Gold has just sort of been bottoming out and holding, so continue to watch it. As far as the big chart, confirmed down move on gold, but it looks like the daily chart's trying to cross over and make some upward movement patterns. Now, that is where we ended the week and where we have been on our three indexes and gold. Let's talk about, this is what we do once a week because again, we talk about following the charts and not the noise, the media noise, all the news that can confuse. What we want to look at though is what happened throughout the course of the week. Well, the Fed's told us that they may have an increase in December as far as increasing interest rates. Maybe we'll see something like a quarter point if we see anything, and it really depends on what? Well, whether or not the economy still continues to move up and the stock market continues to move up. We see that global financial markets continued to rise. They've been unaffected by that terrorist attack toward the end of this last week. Investors appear to be comfortable so far with the potential interest rate hike by the Feds. When we start looking at the Fed minutes that were released on Wednesday, always an important thing for you to pay attention to. We saw a rallying on Wednesday and sustained advances late in the week in the market. When we continue to look at things, we see U.S. housing starts are down, permits rising, U.S. production drops. Weekly jobless claims did fall this last week. Japan's economy is shrinking. Eurozone inflation's up slightly. What are they going to do? More stimulus, of course. And as we continue to watch where things are going this next week, what do we see happening? Well, there's going to be a Eurozone Flash Composite Purchasing Managers Index on Monday. Unless it's something really, really bad, don't expect a whole lot from that, I would not think. Also on Monday, you're going to see Japan's going to release its Flash Manufacturing PMI. Let's see, as the week moves along, you'll see on U.S. GDP is set for revision on Tuesday, so do pay attention to that. If the figures are really good or really bad, that'll be something that could affect the market. On Wednesday, durable good orders in the U.S. are going to be published, and then Thursday, CPI, Consumer Price Index in Japan's going to be reported. So again, Wednesday could be something depending on how GDP is reflected. And like we always say, do spend some time at the end of every week, beginning of every week, either one, over the weekend like we do, looking at the big charts. And by the big charts, I mean the weekly chart, and then see how the news has affected what went on in the market and then what we can expect to potentially move the market this next week. Those things are important, and make sure to put those on your calendar. We so much appreciate you joining us, as always, at chartingwealth.com. It is our pleasure to be with you. We love to hear from you. If you have not taken our 15-minute How to Read a Stock Chart course, you can get it for free along with the charting layout that we use. We'll send both of those things to you along with signing you up for our daily review of the markets, where you'll also receive once a week our weekly review and forecast. All you got to do is go to chartingwealth.com. Thank you so much for joining us. Hope that you have a great week trading and investing in the markets. And of course, how do we advise you to do that? You start learning. You'll learn how to read a stock chart, and you start your virtual trades by setting up a trading account in the online brokers for free. You can become a virtual millionaire by just putting $1 million in there of virtual money and start learning how to invest, listening to us, learning, practicing. And then when you get good at it and you can consistently make good trades and earnings, then what do? Then you make your own decisions. We're not a stock calling service. We're an education firm. Thank you so much for chartingwealth.com.